think, it has given a lot of simplicity and easy access for a lot of people who are not kind of investment professionals who didn't have access to these investment products before the invention of these technological platforms. So I think technology is definitely one thing that is changing the investment landscape. Not just from a investment return generation perspective, but also from an access perspective. It makes it easy and achievable for anyone to start investing and to be able to achieve their financial goals. Don't feel like you need to know everything or you need to be an expert before you invest. Of course, do your research, right? It'll be best, of course you'll be a better investor if you're more equipped with more knowledge. But I think a lot of people hesitate to start investing because you feel like, I don't have the required knowledge. But sometimes you just have to try and you have to make mistakes.
She Economy Women Leading the Change สนับสนุนโดย Women in ETFs องค์กรระดับสากลที่ไม่แสวงผลกำไรกับสมาชิกมากกว่า 15 ประเทศทั่วโลกจากความร่วมมือของ StashAway, Trader KP, Beside BKK และ Business Tomorrow ด้วยความตั้งใจผลักดันความสำเร็จของผู้หญิงในแวดวงธุรกิจและการเงินมาร่วมคอมมูนิตี้พื้นที่แลกเปลี่ยนความรู้ข้อมูลข่าวสารและกิจกรรมดีๆเพื่อผู้หญิงไทย
Welcome to She Economy, Women Leading the Change in Thailand. This is brought to you by Women in Exchange Traded Funds. For those that may not know, Women in Exchange Traded Funds, or we, Women in ETF, is a non-profit organization that's main purpose is to connect, support, and inspire. My name is Rebecca Sin, head of ETFs at Bloomberg Intelligence. I was previously the co-chair of Women in ETF Asia Pacific, but now I'm head of APAC Liaison, and I'm thrilled to announce that we have launched a new chapter in Thailand, Women in ETFs in Thailand. We hope that all of you guys will sign up through the links below and join us as we embark on this adventure and new chapter in Thailand. So today we are joined by Stephanie Leung, CIO of StashAway. She has an extensive background of more than 20 years in investment banking. She started her career off at McKinsey, working as a consultant, has worked at Goldman Sachs, was a portfolio manager, portfolio advisors, knows everything about asset allocation, and is now the CIO of StashAway. So welcome, Stephanie, and thank you for joining us on this episode.
Thank you so much, Rebecca. Very, very happy to be on the show and to be able to share with everyone our journey.
So tell us about your career. You've done a lot of different things. What's most exciting? What have you liked most?
Yeah, I started my career at McKinsey, not in finance, but I also closely related. I was doing management consulting, kind of talking to different companies on how they come up with different business strategies. I said it's not directly business, or I said it's not directly investment, but still, because of the business nature of it, we know that whenever we invest, we're looking at different businesses. So I guess my interest in business and finance started at an early age. After McKinsey, I basically started my career at Goldman, where I started out as a research analyst covering macro for Goldman in Asia Pacific. And the job that I was doing there was basically advising CIOs, chief investment officers, across different regions and telling them, where are the investment opportunities. After Goldman, I basically went to the buy side. So in finance, we have something called sell side, buy side. Sell side is basically the investment banks. You're trying to sell service to investors. So buy side is where sort of we categorize the investors. So I've been an investor for more than a decade, and my specialty is actually in looking at global asset allocations, meaning that we think about investments not from a single name, single stock basis, but from a kind of top-down world view. So we start from thinking about where the economy is, how it affects different countries, different sectors, and then we make the asset allocation choices. Today I'm the CIO and Chief Investment Officer at StashAway. So StashAway was actually established about 7-8 years ago in Singapore. So our headquarters is still in Singapore, but throughout the years we've expanded our coverage to many countries in Asia. We have offices in Hong Kong, obviously this is where we're shooting this from. We also have offices in Malaysia, Thailand and Dubai. So what StashAway does is that we are a digital wealth management platform, and we make it super easy for anyone to start investing in these kind of global asset allocation portfolios. A lot of our users are basically 30-year-olds, 40-year-olds, maybe just like you who is watching this video, have a regular job, doesn't have a lot of time to manage investments, but would love to start, would love to have somebody you can trust to kind of leverage on, and all done through a very, very easy to use mobile app. So this is where we are, and I guess, we can go into other questions and talk about more about my journey.
So let's start with your journey. You start off at McKinsey. For those that may not know the difference between sell side and buy side, sell side is usually the banks. But then everyone always wants to go to the buy side, which is ultimately the people that manage money, the people that say where the money goes, where to allocate to, and where to invest to. How did you go from a consultant into finance?
Yeah, I guess, I've had an interest in investments quite early in my life, and that kind of comes from, I think, being in an Asian family. You talk a lot about investments, stocks, money at home. So my family was no different. My dad actually, he's a doctor, but he spends a lot of time looking at markets. So did my grandma, actually.
Oh, wow.
So yeah, so at a very, very early age, I was kind of taught the concept of, you can make money from good investments. I still remember my very, very first so-called investment. It was actually not a true investment because I didn't know what I was doing, was basically in currency. And that was a tip that I think I got from my grandma, and then she told me, go get some Australian dollars. So I went to line up at the bank and got the Australian dollar. And then a few days later, I saw the prices tank and I panicked and I went to the bank and exchanged it. So that wasn't real investments because I didn't do any research.
How old were you when you did this?
I was about 10 or 11.
See, you were already trading FX at the age of 10. That's very impressive.
But then what I realized, after professionally being an investor, is that FX is actually the hardest thing to trade, because everything else, equities, bonds, they go up over the long term, right? FX is a zero-sum game. So trading FX is actually very, very, very hard. So, but that's how my very, very first experience with money management or sort of trading or punting, to be kind of more precise. But I actually went to the States for my undergrad study. So I did computer engineering as my undergrad and computer science in my master's. And the reason why I did computer science was because I really love problem solving. And I love, with programming languages, with all the algorithms, you can actually solve a lot of problems. And to me, investing is actually a very challenging and very interesting type of problem solving, because it's not all about numbers, right? You can churn all the data in the world, but still arrive at the wrong conclusion if you are not aware of the qualitative things that are going around in the world. And a lot of this has to do, for example, with human behavior. So we all know that we have some behavioral biases when we're investing, and that's kind of manifesting in a lot of the stock behaviors. And I think to be able to solve the puzzle of how do you generate investment returns is actually a very, very rewarding experience for me.
So there's a lot in that few minutes. So one, don't have your first trade be an FX trade. Yes. You're going to start investing at the age of 10. There are other options, maybe fixed income. But the other thing is, I think when you mentioned, you study computer science and computer engineering, I did mechanical engineering, and similar to you, I had no plans in going into finance. But for various reasons, you ended up in finance, and a lot of it is problem solving and, trying to figure out, what to do next. And so I think with your career and your experience, is there anything you regret? Or you would do differently?
Yeah, I guess if I think back to my younger self, in terms of career-wise, I think one thing that I wish would have done more is actually to ask people for help. I think perhaps as kind of female professionals, we have this kind of inherent, or maybe it's just me, we have this kind of inherent fear of showing that you're weak. And I think actually showing weakness is, over time I've learned, is not a bad thing. Because then, people come to you to help, you learn from others. And even though, we try to be successful in our career, we don't have to be strong all the time. And we're not strong all the time. And even if you look at our male counterparts, a lot of them may appear to be very, very alpha or very strong, but at the end of the day, they do seek help from their mentors, from their peers, from the network, etc. So I think this is something that perhaps if I think back, I wish I could have done more. I wish that maybe I would have seeked out for mentors earlier in my career. I think good mentors really help you to think ahead, and also, of course, to kind of learn from as well. So I think that is maybe one of my biggest wish that I would have done.
So if you're listening to this video or watching it, make sure you always ask for help when you need it. 2024 has been a very exciting year for the markets, from the US rally to tech rally. NVIDIA just announced results, to Japan, Nikkei 225 being up more than 15%. From an asset allocation standpoint, and as CIO of StashAway, what are your thoughts for the next 6 months? Are we going to have a recession, and where should we be allocating to?
I guess we are getting a lot of questions about how we think about the US economy, particularly given that, recently data seems to have slowed down. If you look at the unemployment figure in the US, for example, it has triggered what is called the SAM rule, basically meaning that unemployment rate has increased at more than 50 basis point pace since its 12-month low. And the reason why everybody is talking about this is because coincidentally, the SAM rule, the triggering of this SAM rule, has coincided with every single US recession in history since World War II. And to that, we would say a few things. Number one is that, even though this SAM rule is named a rule, it's actually not a rule, it's just an observation. The difference is that there's no economic backing supporting it. And even Sam, who sort of created the rule herself, says that, basically, she doesn't think the US is in a recession. I think if you look at some of the higher frequency data as well, and for example, the August numbers, or if you look at consumption, it's still fairly strong. So I would say that even though we think, yes, the US is slowing down, which is in itself not a bad thing, because with that, inflation is also coming down. We think that actually the risk of US entering a recession in a very, very short period of time is fairly low. And indeed, if you look at some of the historical crises, like the 2007 great financial crisis, or even COVID, there are some structural issues in the economy. Now, of course, like the GFC in 2007, that was a big housing bubble in the US. And I guess in COVID, it was like COVID, basically, we all knew what happened. Right now, when we look around in the US, there's no such systemic risk, right? It's, of course, we can argue that AI may be a bubble, and there may be a bit of overinvestment in that segment of the economy, but it's not that big, right? It's not going to cause the whole economy to collapse. So I think a lot of these are just sort of maybe more market noise and headlines, and therefore what we look at is data, and that's kind of how we invest at StashAway. And if I reflect back on 20 years of investing, from kind of my journey, my experience, is that sometimes, headlines actually don't convey the whole picture. And there are reasons why headlines are headlines. They're trying to grab your attention. So they would tend to be a bit more dramatic. And then, investors tend to overreact. However, if you look at the data itself, it tells you a much clearer story. And most of the time, we just need to stay calm.
I think as my day job as an ETF research analyst, if we look at the data, ETF flows at a record number. We've already surpassed $1 trillion in assets this year, all going into ETFs. And what's interesting this year is that most of the, I think roughly 60% has gone into US ETFs, but the rest is actually in Asia. So China, for the first time ever, has seen $100 billion worth of inflows. And so people are investing and people are finding pockets to invest in. Like currently, China is considered very, very cheap from a valuation perspective. And so I think to your point, when you think of, what's going to happen in the next 6 months, there's definitely areas of growth and areas that we can invest in.
Yeah. And I think, also, I guess we talk about the next 6 months, but from our perspective, 6 months is a very, very short time horizon, right? In our entire investing, like so-called career or like lifespan. A lot of us are actually investing for retirement, for example, which is a 30-year, 40-year, 50-year time span, depending on, of course, your age. So like the next few months, actually, if you zoom out, doesn't matter that much. And I think it's mostly important to identify some of these kind of very, very long structural trends and be invested in them. You mentioned about ETF inflows into Asia. I think, India, for example, is another very, very good example. We like India for its structural story. India population growth is a very, very obvious driver of the economy. And also, I think there are sort of, if you look at the data, there are changes on the horizon that, they're investing in infrastructure, there's foreign money going in. So a lot of these things would be kind of beneficial for the economy. And I think when we invest, we tend to kind of generate the most alpha, so-called, like above market returns, or just kind of absolute returns by focusing on these very, very long structural themes or structural places where we can generate good results.
I think a few things that note about India is that I think less than half of the population more than half of the population is under the age of 30. And so recently, ETFs and mutual funds have been added to the retirement schemes in India, and you can invest as little as $6 into a retirement scheme in India. And this is all done through their mobile phone. And so the use of technology has really changed the way that people are investing. So given your career and you've been in the investment world for more than 20 years, what have you seen change the most and where do you think that's going?
Yeah, I think you alluded to it, right? Technology. I think technology is something that is very close to my heart. As I mentioned, I studied computer science when I was much younger. And indeed, my specialization was in artificial intelligence. And of course, like 20 years ago, we didn't have Gen AI. So it was all about...
No ChatGPT either.
Exactly. No ChatGPT, no like Mid-Journey, there's no generation of images. All we did was try to do natural language processing. And of course, things actually progressed a lot in the last 20 years. We talk about AI these days, but apart from AI, I think there's a lot of other technological innovations as well, right? For example, StashAway is part of it. StashAway is a digital wealth management platform. And these things actually didn't exist 10, 20 years ago. And I think, it has given a lot of simplicity and easy access for a lot of people who are not kind of investment professionals who didn't have access to these investment products before the invention of these technological platforms. So I think technology is definitely one thing that is changing the investment landscape. Not just from a kind of kind of return generation perspective, but also from an access perspective. It makes it easy and achievable for anyone to start investing and to be able to achieve their financial goals.
I think an interesting things for our audience, especially for the younger ones who may not know. I don't know about you, Stephanie, and this is kind of dating myself, but when I was studying mechanical engineering in university, the computers didn't have much computing powers. They're not the computers that we have now.
Right.
And I remember when I was in university, I had to go to the computer lab to use the computers because the servers had taken up a whole room. You couldn't get that same power on your laptop.
Yes.
I don't know if you had that problem.
Yes, of course. And I'm sure we were from the ages of the fax machines.
Yes. So I never had a laptop in university because the computing power for engineering was just not great enough. So we would always have to go to the computer lab.
Yes.
And in the first job that I had, I was working at Deutsche Bank on a trading floor in London, so one of the largest trading floors in the world, and I was a market maker.
Yep.
So I was sending prices to the various exchanges, the London Stock Exchange, Paris Stock Exchange. And at the time, I had 8 computer screens and 5 computers. And the reason why I had 5 computers was each computer was for a different exchange because the computing power wasn't that big.
Yeah.
Now we fast forward to now. Most people are market making, it's all done electronically and they can all do it in one computer. So I think the fact that, where technology was just 20 years ago to where it is now is drastically different.
Yes.
And to your point for the investors, you can invest via your mobile phone now, via a few clicks. So like StashAway, you have an app. Tell us about the app.
Yes. So I mean, one thing that wasn't available when computing power was much lower was the ability to handle like a lot of trades, a lot of executions, a lot of like customer accounts at the same time. And I mean, as StashAway, that's what we do, right? Because we manage a lot of customer accounts. And of course, like as a user, you don't see it, right? You only see like a very beautiful app. You see like a very easy to use interface. But all the complexity is kind of managed on the back end. The complexity includes, of course, I mentioned trading, I mentioned like operations, but also the complexity in terms of determining the asset allocation, right? Determining, I mean, what assets will perform better. And I mean, this is done by myself and my team, who actually basically runs all these systematic algorithms to determine, I mean, where we are in a macro cycle and how we respond to that. So I would say that as a user, basically what you can see is just the distillation of a lot of hard work that has gone into creating the app itself. And I mean, our whole goal is to make it as simple as possible for anyone to start investing, and for as low cost as possible. Because I think one thing that technology brings is also that I mean, there's a lot of cost savings, right? For example, you think about a traditional fund where it's run by a big investment team. Of course, you need to pay these people. But for example, for us, because we run everything on a system, therefore it's a lot cheaper. And also it comes from the scale as well, right? If we have many more customers sharing the cost, then it becomes a lot cheaper as well. So I think technology enables like easy to like accessibility, but also like cost effectiveness. And that's kind of what StashAway is trying to bring out.
So you often hear that it's very difficult to succeed in the finance space. There's a whole range of reasons on why, from career option, whether you want to be a trader, front office, back office, buy side, sell side. What tip would you say on how can you succeed in finance?
Yeah, I think as you mentioned, right, finance is a very, very diverse field. So I think the important thing is to identify where your passion is, what you actually enjoy doing on a day-to-day basis. Because finance is not easy, right? You work very, very hard. I think we all work very, very hard. And for you to succeed, or for somebody to succeed, that's kind of the basic criteria. So you have to work hard. The thing is, if you're working in an area that you don't enjoy, it's very, very hard to sustain that. It's very hard to just get up every day and go to work and like just kind of work yourself to the max and go home. And so I think that's kind of the number one area. And I mean, for somebody who is interested in taking risk, then yeah, being an investor is a very, very rewarding experience. But of course, not everybody has the appetite to take risk. And if you're just into like data crunching or just kind of into understanding problems, then maybe go into research, which is a different field. Or if you just enjoy the excitement of making deals, then maybe go into investment banking. So it's all very, very different. And I would say, like for somebody who's starting out, you may not know, but I mean, try and also talk to people. And as I mentioned before, I mean, seeking a mentor really helps. I think the second thing is that you have to stay curious, because things change all the time. I think the great thing that I enjoy working in finance is that every day is different, right? Because the market throws like different problems at you every day. Like today, you may feel like a hero. Tomorrow, you feel like, oh, I didn't know anything. So like by being curious and also by staying humble, I think that's how you enjoy kind of the dynamism of being in finance. So I think, yeah, it's not for everyone, but for somebody who has like the curiosity and love to learn new things all the time, it's a great field to be in.
I think a lot of what you said resonates with a lot of people. And I just launched a podcast called Tiger Money. And we interview a bunch of C-suite people. And every time at the end, we ask them this question, what advice would you give your younger self, or career advice? And one of the things that they all say is, persistent, keep trying, and don't give up and be patient. Because ultimately, your career isn't just one day, 1 week, 1 year, it's a journey. Yeah, and so it takes time.
Yes.
So next question is investment advice. What is 3 investment advice you would give people?
I wish I could give more.
Only 3.
I guess like 3, the most important advice, I think, is number 1, don't feel like you need to know everything or you need to be an expert before you invest. Of course, like do your research, right? It'll be best. Like, of course, you'll be a better investor if you're more equipped with more knowledge. But I think a lot of people hesitate to start investing because you feel like, oh, I don't have the required knowledge. But sometimes you just have to try and you have to make mistakes. And I think even for professional money managers, we make mistakes all the time. And it's just, we have to admit that that's just part of it. If you look at the statistics, the best portfolio managers globally make the wrong investments like more than 50% of the time. The key is, of course, like with experience, then you know how to make mistakes that don't cost you a lot of money. And sizing it comes to a big part. How do you mitigate the risk by mixing in different assets? These are kind of the technical skills. But even without these kind of more sophisticated technical skills, everyone should try. Try. If you're not confident, try with a smaller amount of money. But if you don't ever try, if you haven't ever lost money, it's very hard to kind of be a good, investor, because there's a lot of emotional ups and downs. I think secondly, to my first point of you don't have to be an expert, the second advice is, of course, we started StashAway exactly because we understand a lot of people don't have the knowledge or don't have the time to really go into each investment to make these decisions. So there are there's StashAway, also there are other platforms that are available that makes it very, very easy for anybody to start investing. And so with technology, with these kind of easy access, I think everybody can make use of these platforms. So for example, at StashAway, what we do is we try to, help people to decide what portfolios they invest in by having a StashAway risk index associated with each portfolio. And these risk index are basically the maximum drawdowns over a 12-month period with only a 1% chance of losing more than that. So for example, if you are sort of moderate risk, if you go to the bank, right, and you say I'm moderate risk, there's no way for the bank to know that whether your moderate risk is the same as my moderate risk, or what does that mean. So at StashAway, we translate that into an actual number. So for example, we have StashAway risk index 20 portfolio, which means that you can expect in a very, very bad market outcome, the portfolio only has 1% chance of losing more than 20% on a 12-month basis. So it gives you some sort of risk expectation before you invest. And that is the only decision that you need to make on StashAway. So I think it makes it very, very easy for anyone to start investing. And then lastly, I think the third tip is that you need to understand there's a difference between trading and investing. And I think this is something that I have come to learn throughout my career, and I don't think a lot of people make that point very, very clear. But it's very, very important because these are two different ways of making money. You can make money both ways, but one is very difficult. The other one is very easy. Making money from trading is very, very difficult, but making money from investing is actually quite easy. The reason because if you trade, you're basically trying to take advantage of the market's ups and downs. So you need to have the technical knowledge to try to capture these very, very short-term moves, which a lot of times are kind of, it can be random, but it also can be kind of based on information asymmetry. So and you have to watch your investments all the time. But of course, all of us have a real job or other things to take care of, like kids, families, etc. So you're not going to be watching the market the whole time. And that's why I think for most people, you should not trade. But investing is easy because if you look at just kind of asset classes, equities, bonds, these have positive returns over time. And if you look at kind of the longer time horizon you look at, for example, over a 20-year period, equities would never have been down. So you can have this sort of, faith or have this trust that, these are investment assets that will give you return over the long term. And once you make the investment, you don't have to think about it because it will, the returns are based on earnings growth of companies, are based on economies growing. So all these things are quite natural. So I think most people should invest, but trading is not for everyone. So make the differentiation between the two. Make sure you're not trading, but you're investing.
Okay, I'm going to try and summarize the three things. So the first one is don't be a day trader, but invest for the long term. I was laughing when you were saying this because my first job was a trader. I was in essence, managing money, sending prices to the exchange. So I was trading on a daily basis. And so don't trade on a daily basis. Think long term, buy and hold. ETFs are perfect for that.
Yes.
The second one is you need to start somewhere.
Yes.
And don't be scared if you lose money. On our podcast, Tiger Money, we interviewed Mark Mobius. And you may not know, but Mark Mobius actually didn't start investing until he was in his 50s.
Oh, wow.
And so most people think that Mark Mobius was investing, right from in his 20s, but he actually didn't start investing in his 50s. And now, he's an acclaimed portfolio manager. He's written more than 10 books. So it's never too late to start investing. And then the third one,
basically, use technology, right? Use platforms like StashAway to help you get started. Because I think, again, to my point about not being an expert, you don't need to be an expert because we have experts that can help you.
So you don't need to be an expert and do your due diligence. Very important. So last question that we have. How do you do it all? How do you manage work, being CIO, still managing, personal life? Is it possible? And do you have any tips on how to manage the work-life balance?
Yeah, there's a lot of things to take care of in life, right? We all have our career, family, kids, health, exercise, and friends, of course, right? Social. So I think there's I wouldn't say I have mastered it all because I'm still trying to optimize my time. But I would say, there's a few tips that I can share from my journey. I think the number one, the most important thing is to set your priorities and to understand what your top priorities are. So this, of course, applies to your life. So, we all have different aspects, and maybe some things are more important than the others. You don't have to prioritize everything. Nobody's asking you to do everything at once, right? And these priorities can change as well, right? According to the different stages in life. But it's important to keep in mind, where you rank them. Then you can allocate resources, and time is a very, very important resource to these different goals. I would say that it's not just kind of the macro priorities, but also you need to do it on a day-to-day basis. So every day, I guess I have my morning routine. One of the things I do in the morning routine is that I just put down 3 things that I need to do for the day. And there's only 3 things because I realize I can't do more than 3 things. And if I write it down, then throughout the day, then I can try to prioritize time for these things and make sure that I get these done. So when you kind of keep doing it day after day, month after month, year after year, then you start to see results. So I think there's no one kind of magic bullet, or I think actually somebody asked me, is there an AI tool that can help you with productivity and optimizing your time? I was I wish there was such a tool, but it really comes down to your own discipline. It comes down to how you make sure that you always kind of have the goal in mind and be on track to achieve these goals.
I think there was this book that I read. I think it's called The Atomic Habit,
Yep.
and it talks about how very small changes can make a big impact. So, for instance, just writing down 3 things a day and doing that over time, you get into this habit of doing that. Another suggestion that someone once gave me was make sure you allocate time for yourself.
Yes.
So every day in your calendar, allocate half an hour, 1 hour, whatever it is, for time for you to do whatever it is that you want. You want to take a nap, you want to meditate, you want to go for lunch, you want to watch YouTube. Just make sure that you have your own personal time so that you can, pause, reflect, and be more refreshed on that.
Yes, absolutely.
So with that, thank you so much for your time, Stephanie. Thank you so much for joining us. We hope that you've enjoyed this video, and we hope that you will be able to join Women in ETFs. Thank you.
Thank you, Rebecca. It was lovely speaking to you. Thank you all.